We are back, and as promised, it is time to answer some of your questions. Joe, to you first from Ken in North Carolina. Want to start a position in Abbott Labs. What are your thoughts?
So I've had a position in Abbott Labs, but I would tell you starting a position with the stock at $100, I'm not sure I would do that. I think the stock from here, it's going to be difficult to achieve further upside potential. Last week, they did report the quarter. The diagnostics, the medical devices were good. They offered earnings visibility for 2021, which they had held back on. That's a good thing. But as I said, I think the stock is coming to a price point where it's fully valued. I would not enter here.
Josh, to you from Phil in Maine. What's up with Verizon? Doing poorly. Stock hasn't done anything in the past few months.
I think it's traded in line with its peer group. I think with Verizon, the way to think about it is it's more akin to a fixed income investment than an equity investment. Nobody should buy this stock expecting fireworks over something like 5G or whatever. It's obviously going to be more volatile than a bond, but ultimately a big part of the total return you should expect here is the 4.5% dividend yield, which I think is extremely safe. And so anytime you see volatility in the stock, I would be taking advantage of it, building a position, and doing automatic dividend reinvesting. And I think if you do that, Verizon, from a total return perspective, is going to give you a much better return than what you would get in a, let's say, 10-year Treasury bond selling under 1% yield. This is the way to go.
Okay. Bryn, to you, Phil in Oklahoma wants to know about Ralph Lauren. Is it a buy, especially considering the dividend?
Yeah, great question. I own Ralph Lauren. It's part of the basket of epicenter names that I own. I wouldn't buy it for the dividend. I think the dividend's around $3.60. It could be down that much in one day. If you buy it, I would leg into it. Obviously, it has a lot of exposure to big box retailers. It's got a lot of global exposure, but I would leg into it slowly. And I think the real upside is not going to happen until we get a vaccine or a therapeutic of sorts.
Amy, to you, Mitch in Nashville, what's your opinion on Nextera Energy?
We like Nextera. It's outperformed its peer group by a lot so far this year, so we wouldn't be surprised if it paused a little bit, just relative to the other utilities. But from a long-term perspective, we like it.
Joe, sorry, Josh, I have one question for you. I'm going to sneak one more in. As a new investor, should I buy value ETFs or fractional shares? That's from Citizen Dan. It's an interesting question. ETFs or fractional shares for a new investor?
I think ETFs. I'm not sure that value ETFs.
No,
versus
I misspoke.
ETFs.
I misspoke. That's my fault. Not value ETFs.
Yeah. Well, here, you know what? I think you should do both. So I think like learning the markets via individual stocks is much better. It's more fun, and you'll get a lot more out of that experience because you'll understand why stocks go up and down, how people value different events. But if you're really trying to build a long-term portfolio, the index ETF is going to just give you much broader exposure than you can get, even if you tried to buy 40 different stocks with fractional amounts. So try to build with the index ETF approach, and if you've got extra money left over, do some trading, learn some stuff about winning and losing, learn a little bit about your own personality. I think a little bit of both is probably the right answer.
I was off Twitter for a while. I'm learning how to read it again, so that was my bad. But thank you for that answer.